So I think that, so the US was relatively insensitive to rates on the hiking cycle, and that's because the US consumer has more fixed rate debt than the average, say, European, for example, or average person in emerging markets. And so raising rates from, 0 to over 5% doesn't really do much if you locked in your mortgage at 3% for 30 years. Whereas it does impact Canada, it does impact Australia, it does impact a lot of European countries where um, their housing payments start to adjust after some years. Um, and same thing for emerging markets. So I think that on the cutting cycle, we're also going to be fairly desensitized to it in the U.S., which is to say that I wouldn't expect a very large refinancing wave in this cycle because we're probably not going to get a lower low in mortgages. Around the margins, it'll encourage buyers that have been holding off for a period of time, so that'd be a little bit of activity. It should be beneficial to small businesses. They generally borrow at shorter durations from banks, and so as the rates come down, it should be beneficial to them. But overall, I think it's probably more impactful for the dollar and for global markets and for corporations with global earnings than it is for the domestic consumer. I don't think that rate cuts are going to be particularly stimulative for the domestic American consumer. So I'm not particularly invested, like I'm not particularly interested in companies that are heavily levered toward the American consumer is how I'd put it.
Okay, but would you see a broadening, I guess, of the US market? Because I know there's lots of people talk about that, small caps, RWM is going to sort of outperform, and yeah, maybe not as concentrated as it has been. So I guess in the US, is that what you're thinking may happen?
I think so. I think that's part of the rotation. Generally, decades where you see emerging markets do well, you generally also see value do well. So the value sectors, commodity sectors, as well as things like gold. There's basically a bunch of these anti-dollar trades. If you look at U.S. markets, yeah, right now investors are paying up a lot for growth and for low volatility companies. Costco's like earnings visibility is high and its volatility is low. Whereas banks right now are very cheap, but no one really wants to own them. There's a bunch of slower growing companies trading at, like 8 times earnings or 12 times earnings. They got more choppiness in their earnings. I think those companies could do quite well. Um, I struggle a little bit with small caps because so many of them are unprofitable. Um, so when I look at for signs of potential rotation, I look more in the mid cap space, or I look at say like the equal weighted S&P 500. So if you look at the equal weight versus the market weight S&P 500, it's the same companies, but instead of kind of weighting them toward the biggest mega companies, they're just equally weighted. And so you're kind of geared more on average, like the the marginal holding there is more toward kind of the lower end of the S&P 500 than just the concentrated in the top 10 names. Um, Over the long term, multiple decades, equal weight has outperformed market weight. But there are certain cycles where it does way worse or way better. And this latest cycle has been one where the market weight has done way better. And so I look for potential signs and reversal of that. If I do small caps, I probably would want a certain profitability filter on them. So like small cap value. They basically by having a value component, you then place like a profitability requirement pretty much on them. And so around the margins, I'm a little bit less focused on say the Russell 2000 per se, and I'm more interested in profitable mid to lower end of large cap stocks as well as potentially small cap value. But I see if we do get these rotations, I would expect a lot of them to occur together as they have in the past, which is US to global and growth to value and equities to gold, right? Those things tend to go in these cycles um, for a variety of reasons, and that's kind of the overall rotation that I'm potentially looking for.